Okay, so good afternoon, good morning for those of you who are in the United States. We are very pleased to welcome you to our full year results 2015 for Ipsen. So I'm Marc de Garidel, I'm the Chairman and CEO of Ipsen. Along with me, we have Aymeric Le Chatelier, who is our Chief Financial Officer, who will be speaking in a few seconds, and also Claude Bertrand, Head of R&D. So you are familiar with our disclaimer and safe harbor. So let's talk briefly about our agenda. So I will start with a general introduction about 2015, the progress we have made. We will go into the more detailed financial review with Aymeric. And then I will come back in the third part of the presentation to explain in particular the recent deal we just signed earlier this morning with Exelixis. And we will also talk about the outlook, financially speaking, for 2016 and beyond, given this important deal for the company. So let's start with a quick overview of 2015. So for those of you who are familiar with Ipsen, our strategy is around essentially two types of businesses. A specialty business that has been growing for about 10% in the last 10 years, which represent now about 77% of our sales. We have also a primary care business, which has been fairly stable over time, which now represents only 23% of our global sales. In 2015, the big news has been actually on the middle of the slide, where the geographies have changed. Historically, Ipsen has been very strong, obviously, in Europe and in emerging markets. But you see that in 2015, the emergence of the United States, representing now 11% of total sales for the group, while it was less than 6% in the prior year. As a result, the US affiliate is now number 3 after China and France. And we expect in 2016, actually, the United States to become number 1. So let's talk about the key execution milestones that we have reached in 2015. First, you recall that last year in July, I presented an update of the strategy of the company, which, again, I'm going to comment upon in terms of how we deployed it and the progress we've made so far. We are very pleased to let you know that 2015 operationally has been a great year. Actually, when you look back for the last 10 years, we have never achieved double-digit growth rates. So it's really our best performance in sales growth for the last 10 years since we became public. And also importantly for investors, the promise that we made to turn around the United States has been achieved. And thanks to that, we've been able to increase margin by about 2 points versus 2014. We also announced recently a change in governance, whereby I will take the chairman of the board responsibility. And I have started a search for a CEO, which, again, we may comment upon later on. So in terms of the strategy, you see here a slide that summarizes where we are and what we presented in July last year. I would like to emphasize a few key points on specialty and also on the primary care. So on specialty, where we've made the most progress, actually, is around NET. In NET, the introduction of somatulin, thanks to the Clarinet trial, has helped us gain, and again, significant market share in the United States and also in Europe. But in addition, we have been able to generate a number of business deals to complement our portfolio for the future. So the first one was with a company called Lexicon, which published very good phase 3 results in August of last year for a drug called telotristat, which will be hopefully filed in the course of the second quarter of this year to be launched so later in 2017. In addition, we have been also fortunate to buy a company based in Germany called Octroi Pharm, which has what we think best-of-the-art technology in the field of PRRT, where we combine essentially peptide technology with radionuclide to use in either diagnosis or also late-stage patients. So beyond NET, where we made, again, significant progress in the field of spasticity, Ipsen was very pleased to report excellent results with Dysport in the treatment of upper limbs. I would like to recall you that spasticity is a condition that is developed after a stroke, so a condition, unfortunately, which is widespread. In 2015, we were able to publish in a great journal as a result of that study, which allowed us actually to get FDA approval and expand our label in Europe. We also filed an important indication in terms of image, which is a pediatric lower limb in Q4 of 2015, and we expect approval in the second part of 2016. I'd like also to remind you that we are also very happy with the performance of our partner in aesthetics with Dysport, Galderma, and Emmerich in a few seconds will show you in particular the US turnaround, which is again great. Primary care has been also revamped last year as part of the strategy, so we are shifting now our emphasis in particular on OTC, OTX promotion. This is particularly sensitive in the Chinese market, where for Smecta we have shifted resources away from hospitals and more into pharmacies. So we have hired in the last part of 2015 about 100 new reps that are now that have been trained and now operational in the field to accelerate the growth of Smecta and to be less dependent upon a price decrease by the government. In addition, we are also looking to licensing new products, in particular probiotics, which will be very complementary to Smecta, and we'll also look possibly at expansion in geographies through small acquisitions. If we look at our results, we see that they are consistent with what we told you last July. So specialty business has been quite strong. We achieved about 14.4% in sales. Primary care, very close to being stable, minus 1.1. So again, in line with the guidance. And our profitability increased to 22.3%, so above, slightly above expectations, and almost 2 points above, again, 2014. So I think really a good progression in that regard. If we look a bit more specifically now to one market, to the United States, you see on the slide, the accelerating growth of the US affiliate, which basically is doubling its rate of growth, achieving close to 65% in 2015. And the key driver has been the pretty strong launch of Somatuline, which has doubled sales since the prior year, and has reached, has actually exceeded the $100 million goal that I had set for the affiliate. This has allowed us actually to become profitable for the first time in our history in the United States, and almost 2 years ahead of what I had told you in early 2014 when we decided to establish our oncology platform in that market. Finally, we also launched the new indication of Dysport for adult spasticity, upper limb, which again is right now on its way. So now I'd like to turn to Emmerich, who will do a more detailed financial review of 2015, and then I'll come back at the end to explain to you the deal that we just completed last night, and the consequences for the financial for 16 and after. So Emmerich, it's all yours.
Thank you, Mark. So now I'm going to go more into the detail of our 2015 performance, starting with the sales performance. 2015 has been a very good year for Ipsen, with a very strong Q4, with revenue growing more than 20%, on a very good recovery, especially for our operation in China. As you know, we had some difficult performance in Q2, Q3, both in specialty care and primary care in China. Q4 has been a strong rebound, and we expect that 2016 is going to show also a good rebound in China. We also saw in Q4 an acceleration of our growth especially for somatulin, which is becoming the first product of Ipsen in 2015, with total sales above 400 million euro, driven, as you know, by the new NET claim, launched both in the US, starting in January 15, but also in many countries in Europe. Decapeptyl is now the second product of the group, is contributing to the total performance of specialty care, even if the performance was a little bit disappointing in China, as we already described in the previous quarter. A good rebound in Q4, but still some pressure in Europe and some other countries. All in all, we end up the year with a flat performance in line with our expectation. Dysport has been the second driver for the growth of the company in 15 in specialty care, especially thanks to the aesthetic market, which has been very dynamic, even in some of the large emerging countries where we have important presence, like Russia or Brazil, but also thanks to the partnership with Galderma, and we'll share some more of the Galderma performance in the following slides. All in all, specialty care growing at 14%, which is a really good performance, contributing to the 10.4% growth of the revenue at constant FX rates, despite a primary care business still impacted by the French operation, even if the French operation are representing a lower share of the primary care business, still under pressure, mainly from a price and reimbursement position, which explain our strategy to move and change the model towards OTC and more retail. Clearly, international markets have been driving the growth for primary care, even if we had some disappointing performance as for Tanacan in France as well as in Russia. Now, just maybe have a specific zoom on the US and the market share performance of the launch of NET, both in the US and Europe. And you see the very good performance in the US, where we've been able to increase our market share from 5% last year to close to 13%, which is an 8-point increase gain of market share through a very good penetration of somatulin in the US. Today, we are addressing almost 1,000 centers in the US out of 1,200 centers, so a very good presence. We are capturing more and more of the new patient, and we are also starting to get some significant switch from Novartis product to Ipsen somatulin. So a very good year in 15 for somatulin in the US, but also in Europe. As you see, we've been able to increase our market share by 2 points to reach 44% in the top 5 countries in Europe, with very strong performance in Germany, in Spain, but also in UK. And for some of those countries, we now expect to be able to reach in the future a market share that will be close or above the 50%, which is, as you know, one of the ambitions that we have, especially for Europe. If we spend a little bit of time on Galderma, as you know, this is the US performance of Galderma in the Dysport aesthetic market. We've signed in 2014, July of 2014, a new agreement with Galderma, and Galderma took over the business from Valeant. You see on that slide the evolution of the market share of Galderma, which took over the business on 15% to bring it to 22%, so which is a 7-point market share on the US market, which is just showing the heavy investment that Galderma is making in the US. Today, there is something like 200 reps that are promoting Dysport in aesthetic in the US market. And as you see, we are back to a level which is even better than when Valeant took over the business from Medicis. A very strong performance in a very dynamic market, because the aesthetic market in the US, which is a big market, is also a growing market, growing at 9 to 10% per year. So a very impressive performance of our partner Galderma in the US. So this top-line performance, which is translating in a 13% sales growth, assuming the positive FX impact, is translating in a significant improvement of our margin at 22.3%, thanks to a good control over the cost, especially sales and marketing investment in the US, but also thanks to the strong performance that you see here on the other revenue line, which is growing by 30%, thanks to the strong performance of Adenuric, partnership that we have with Menarini, and also thanks to the very strong performance of Galderma, as part of the performance of Galderma is accounted for in other revenue and not only in sales. Maybe a few words on the exposure to foreign exchange currency. As you know, Ipsen, it hasn't changed a lot today, as almost 50% of its revenue, which are in other currencies than euro, with a significant exposure to the US dollar that has been increasing over 2015, but also some exposure to some emerging country currency like China, Brazil, or Russia, even if Russia in 2015 has been decreasing quite significantly given the devaluation of the ruble. In 2015, the performance in the evolution of the currency has been positive, especially thanks to the very strong US dollar, thanks also to the Chinese currency, and to another extent to the GBP. At the COI level, the impact has been negative, as we still have a very significant USD cost basis, not only because we are investing in NET to build the infrastructure for our US operation, but also because we have some R&D center, with one R&D center in the US, and the costs are denominated in US dollar, and we have also some other purchases that we are doing in US dollar. Clearly, a very important policy to hedge our position, and for next year, Mark will go more into the detail of the impact, but clearly we will see some negative impact of the evolution during 2015 that will affect our 2016 performance, given especially the emerging country currency that have been devaluating during the summer, and this has a quite significant impact on our both top line sales, but also to our profitability. Now let's go very quickly about some of the evolution of the main line of cost of 2015. As you see, a very good performance in the cost of sales, cost of goods sold, with the reduction due to the very positive mix, especially with the growth of Somatuline. As you know, Somatuline is one of the homemade product of Ipsen with a better margin, but also to the better efficiency of our manufacturing site, as we are growing the capacity and using more of this capacity. You see also on the top right that R&D has been only increasing by 3%. This is mainly due to the discontinuation of the TASQ study that we had planned at the beginning of the year, and we have been reinvesting in R&D, but not at the pace to fully offset all the cancellation of the TASQ studies that were planned initially. As you see, selling and marketing are increasing at a quite high rate, which is in line with our guidance to the market. If you remember, the heavy investment that we are doing in the US was only loaded for 6 months, as we started in July of 2015 to hire the new sales infrastructure in the US. So this year we have the fuller impact of this US operation, which is impacting, as well as the investment that we are doing both for Somatuline in Europe, but also for the launch that Mark was mentioning of Dysport in the US for the new indication in adult upper limb. And you see also that our G&A level is slightly increasing, especially due to the additional infrastructure that we have in the US, but also all the variable compensation on the highest level of the share price, impacting all the variable compensation due to the very good performance of this year. Now let's turn to the net income. A strong performance of the net income, growing by close to 24% as compared to last year, despite the heavy investment, the heavy write-off that we did for the discontinuation of the TASQ study. You remember we booked that in the first quarter of this year, which is accounting in the impairment loss for 57 million. We have added another small impairment of close to 8 million for the final impairment of the Serenbotaz study that were part of the product under review for the acquisition of Syntaxine in 2013. Outside of that, we are benefiting from a very low tax rate, especially thanks to the deduction of the TASQ impairment charge, which explain the very good performance with a 191 million net income for the year, and also the very good performance of the core EPS at 2.78 euro per share, which is also increasing by 25%. As you see that also the level of restructuring has been very low this year as compared to the previous year, which is just showing that a lot of the transformation is now completed. Just as a conclusion on cash flow, it's also a very good performance that we've achieved on cash flow, which is important as we are announcing today a significant acquisition for Ipsen, and we are very happy to see that we'll be able to finance this acquisition thanks to our existing cash. As you see, this year we've been able to improve the level of cash, which is increasing by 35%, despite some acquisition that we've done for close to 40 to 50 million, 40 million in net, including the acquisition of Octreo Farm, the acquisition of Cambex that we announced during the first semester, but also the acquisition of the Telesta rights that we announced in October. Total of acquisition for close to 50 million euro. With this 50 million euro, we've been able to generate 34 million of additional cash with a strong operating cash flow, a reduced level of working capital consumption as compared to the first semester, a very controlled level of capex. As you see, capex account for 58 million this year. We're going to continue to invest, especially to cope with the capacity that we need to make sure that we follow the growth of Somatuline and Dysport. But also we've been able to return to shareholders close to 100 million euros through dividend and share buyback, at 70 million of dividend and 29 million of share buyback. So as a conclusion, this excellent financial year for Ipsen, with not only a strong operating performance in terms of top line and operating margin, but also a very good net income, a strong cash flow generation. So as a conclusion, the board yesterday decided to propose to keep the level of dividends unchanged with last year, which is just showing the confidence of the board in the company, and also to give the ability to the company to pursue external growth and BD acquisition. The best example of it being the transaction that we announced today with Exelixis, that good transition that Mark is going to describe more into the detail. Thank you very much.
So thank you, Aymeric. So we turn, yes, to an important development that we just announced earlier today. The cash flow that we generated in 2015 has been put to good use with a new partnership that we have signed last night with Exelixis for a product which has actually a number of uses. So Exelixis is a US-based company based actually in San Francisco. Today in Europe, it is marketing through Sobi, so the company is a Swedish company, the first indication of the drug in a rare condition of thyroid cancer. About 3% of patients in Europe who have thyroid cancer have this genetic mutation. It's called medullary thyroid cancer. So you see actually it's about 1,500 patients that are affected per year. The drug sells today about 4 million euros. it is so available, and the rights will be transferred later this year. But we did the deal actually for what is in the middle of the column, which is related to the renal cell carcinoma indication, where there is a need, a medical need, which I will explain on the next slide, to fill second-line treatment. You see that in Europe there is about more than 100,000 new patients per year. They progress, so in reality the real potential addressable population for the drug will be in the range of 15,000 to 20,000 patients per year. Finally, also Exelixis has started a large phase 3 programs in hepatocellular carcinoma with more than 700 patients in phase 3. The results should be available in the course of 2017. And you see that in Europe there are about 60,000 patients, new patients per year. So let's look at, in a bit more detail, the use and purpose of cabozantinib in the renal cancer arena. So if you have renal cancer, a doctor will generally prescribe you a first-line treatment with TKIs. So today in Europe, the number one product that is being used is Sutent from Pfizer, which has about 45% market share. Unfortunately, patients tend to progress pretty rapidly on the drug, and today there are only really two options left for physicians. Either they get a new TKI, different from Sutent, or they go on an mTOR inhibitor, which is the other option. All those products in second line have demonstrated PFS benefits, but unfortunately no overall survival. So the big news about our announcement is that Cabo will be the first and only product in RCC second line to have statistically significant results on 3 measures: overall survival, PFS, and overall objective response rate. It will be the only drug in the world that will have, that has demonstrated this efficacy. There are, however, obviously competition, and the only significant competition to date that we see is immunomodulator, which again have demonstrated overall survival, but not no PFS so far. So why did we do this deal? This deal has strategically, I think, 4 key advantages for Ipsen. First, we are buying a de-risked asset. The drug works, we know. It will be approved eventually later this year, given its result, probably in the second part again of 2016, ready to be launched in early 2017 in the first European market. The second importance of this deal allows us to build a dedicated oncology organization, which will mirror what we've done already successfully in the United States. So we'll become a primary candidate to market oncology niche drugs in the future. Thirdly, Cabo is a pipeline in itself. So not only it has the medullary thyroid indication, will get the RCC second line, but it has also other prospects, other new indications potentially, like, for example, HCC. Finally, this drug will be the 4th pillar of the specialty business of Ipsen in the future. We have Somatuline, fast-growing, Dysport, also fast-growing, Decapeptyl, fairly stable. This will add a 4th segment to our specialty business for the future. So what were the terms of the transactions? So earlier today, Emmerich had to go to the bank to disburse $200 million for Exelixis to acquire those rights. It is also important to note that probably by the end of the year, we will have to pay another important milestone of $60 million when we get the approval, the EMA approval in Europe for RCC second line. Other milestones tend to be later in 18-20 horizon. We will be also paying some royalties, tiered royalties. The first layer is at 2%, and it will go up to 26% over time as sales progress. Operationally speaking, this means a number of things for Ipsen. The first one is to take over from Sobi the thyroid MTC indication, so in the next few months, and also get our organization ready for the launch, probably in Germany in early 2017. So this will require some significant commercial investments in terms of presence in a number of countries, and also what we plan to do to mitigate the impact for shareholders is to continue cost containment and project prioritization so that we minimize for shareholders impact between 2016 and 2018. So as a result of this investment and also the strength of our current business, we are pleased to inform you that our financial objectives for 2016 will be as follows. So our specialty business will continue to grow double digits, over 10%. This is obviously at constant exchange rate. Primary care will hopefully generate a slight growth year on year, also constant currency. And our core operating margin will be around 21% of sales. Now, to explain how we come to the 21% of sales, we have to integrate the fact that with emerging markets currencies going the other way, we have to absorb about 100 basis points of negative exchange rate impact on the bottom line due to the currency in those markets. And also we have to reflect the new investments that we are making in cabozantinib, which will take about 150 basis points out of the margin. So that's the guidance for 2016. Now, as you can understand, this deal with Exelixis has also consequences the long term, which I want to illustrate. So last year in July, we told you that the company would be able to grow organically between, to reach a range of 1.8 to 2 billion euros by the year 2020. You see on the left-hand side that we have adjusted that guidance, and now we are confident that we can reach over 2 billion. So the growth of Ipsen as a company in the next few years, as we execute the strategy, should be at least twice as fast as the rest of the industry. In terms of core operating margin, we are definitely confirming our goal to continue to increase our profits and our profitability to exceed 26% at the end of the period, consistent with our prior commitment. And also, we are convinced that 2016 is the trough year in terms of profitability for Ipsen as we make further investments. So for 2016, in summary, what are our key priorities? Number one, we need obviously to continue to perform well on Somatuline and Dysport. They are essential to the future growth of the company. Number two, in primary care, we must succeed also our transition from the traditional model to the OTX model, in particular in China, with the Smecta, where we are investing this year. The third element is to prepare a successful launch of Cabo, the transition with Exelixis, to be able to fully benefit from this important new treatment for patients. And finally, as Aymeric indicated, we will continue actively to look for opportunities in business development, certainly in the United States, where we have now a great platform, but also in emerging markets and potentially in Europe. So we are committed to continue to deliver top-tier growth in the industry and to increase shareholder value as we have done in the last 5 years. So I thank you very much, and now we are going to ask the operator to take questions. Maybe we'll start in the room, and then we'll go to the phone. So are there any questions here first before we take? Yes, first question.
Hello, Pierre Chang from Hamilton Asset Management. Just a quick question about the target to 2020 for the profitability. Will the acquisition announced this morning will have a negative impact in terms of mix effect for the profitability of the group in 2020? How do, yeah, please.
No, well, maybe, Emeric, you can take...
The micro works.
Hello?
Yeah.
Yeah, just to maybe be more specific, what we are showing in the slide on the 2020 outlook is clearly that we are improving our target in terms of sales above 2 billion. At the same time, we are keeping our profitability target, which means that there will be no dilution to be expected from the cabozantinib transaction on our profitability. So despite some impact on the short term due to investment that we have to do this year, and that will also have some impact in 2017 and to some extent in 2018, the product won't be dilutive in 2020. It will be clearly relative to the profitability beyond 2020.
Okay, thank you. Next question in the room. Okay, so if there are no questions in the room, operator, please could you proceed with phone calls?
Of course. And your first question comes from the line of Sachin Jain from the Bank of America. Please ask your question.
Hi, Sachin Jain from Bank of America. A couple of questions, please. Firstly, you've kindly given us the patient numbers for the Exelixis asset. I wonder if you could just give us some framework of how you're thinking about peak sales for that, given the deal terms with close to $1 billion of upfront and the 26% royalty, which seem fairly rich. So any color you can give around that. Secondly, you've alluded to increased investment into 17 and 18. Again, wonder if you could just help quantify that. You clearly pointed to 150 basis points of margin impact in 16. Should we expect that to be greater in 17 and the overall group margins to be flat into 17, given that it's launching in 17, one would expect a greater investment in that year? And then thirdly, just on the competitive profile of the asset, just a couple of quick questions. One, you cited a lack of PFS with the immuno-oncology agents. Can you just cite, from your physician feedback, how important the lack of PFS is? My sense has been that OS is a greater focus. And then related, what's your perspective and your planning on IO combinations? I understand Opdivo, Yervoy, second-line renal data is due in full year 18/19. And then final point on the competitive profile is if you could comment on the toxicity of the asset. The grade 3/4 AE rates are sort of 60 to 70%, and 60% of patients in the phase 3 study had dose reduction. So any comments there? Okay. Thank you.
Thank you, Sachin, for your very complete question. So I'm going to distribute first Emeric peak sales on Cabo.
Yeah, so your question on peak sales, we're not going to give you the precise number as you may imagine. What we can say is first that the peak sale will be for sure beyond 2020, that we expect the peak sales to be above 200 million, but today it's too early to really give a firm commitment to that. You were alluding to the level of royalty. Just want to be clear about the fact that, as Mark was mentioning, royalty are starting at 2%, will climb to 22%. By the way, all the detail is in the Exelixis financial communication that you can find on the website. They are giving all the detail of the tranching. And we get to 26% at the top sales level, and that we have to keep in mind that this is an asset that is ready to be marketed. So it's in line with the market practice in terms of royalty rate.
Increased investment in 2017-18, can you qualify what our plans are?
Yeah, I think that we are not going to give you the exact level of investment for competitive reason. Clearly, we have mentioned that the impact in 16, which will be to start building the sales organization, will be 150 basis points. What we can comment is that we are committed to not have further decrease of margin in 17 and 18, and that we will be able to compensate any impact on the margin by the growth of the business in 17 and all the actions that will be taken to make sure that we start re-improving margin starting in 17 and for sure 18 to be able to deliver, given the ramp-up of the product, the 26% target.
Thank you, Aymeric. So now we are moving to the questions on the competition on Cabo. So Claude, a few elements. So what do you think about the importance of PFS, the new combination treatments that are ongoing in clinical trials, and also the toxicity of Cabo or the competition? So.
Yeah, so I'll start with the PFS comment. So you're absolutely right that OS is the ultimate goal now in oncology, and that's something that we need to have, and that's what both products have. So then we are coming to ease of use of those products, and when I'm saying ease of use, is mostly for the medical community. Of course, it's easier to treat, and especially if you have to treat for a certain period of time, to see benefit in progression-free survival, because otherwise you are treating with a treatment, and especially with immunomodulator, where you know that probably not more than 15 to 20% of the patients are responding, and they are basically progressing while under treatment. So we'll see in real life on how that translates, but what we believe strongly is that it's always better to have both PFS, OS, and actually in this case also ORR. On the side effects, actually this is also very good questions. I think again, probably an advantage for an oral drug versus injectables is that you follow and you look at how the patients are responding, both from an efficacy point of view, but also from a safety point of view, and then you can adapt the dose as you progress. And that's exactly what happened in patients where there are more side effects, which by the way are very well known with sticky eyes, which is another advantage, because this class has been used now for a long time. So there is nothing new with Cabo than we have seen with other TKIs. Therefore, medical doctors know it very well, and they adapt the dose because it's an oral treatment, and following the response at the same time. So I don't think there is anything new there or worrying for Cabo versus any other TKIs. But what I want to emphasize again, this is the first ever drug in that indication with that mechanism of action that show overall survival, and a very significant one.
Thank you very much. Combination, you want to say a word on combination in terms of...
What was the question?
Well, the question, there are some ongoing trials to look at combination products.
Yeah, I think that, again, the advantage we see with Cabo is that we believe that in a very well-known class of drugs, it's probably going to become the standard care. And therefore, basically, any other new treatments will have eventually to be combined with cabozantinib. So it will be part of the arsenal that will be used in that indication, second line or even third line. Right now, the only combination we see that could eventually get to the same level of efficacy are a combination of immunomodulators, but we know that there are other issues with those, again, in terms of side effects, and probably not synergistic efficacy as you would see with TKI. So I don't see any of the combination ongoing right now being a problem in terms of competition. And keep in mind that both Cabo and the trial with Nivo, the Checkmate trial with Nivo, are raising the bar significantly in that segment for new entrants.
Okay, thank you, Claude. So we'll take the next question.
Thank you very much. And your next question comes from the line of Matthew Weston from Credit Suisse. Please ask your question.
Good afternoon. Thank you for taking my questions. A number, if I can, slightly asking one of Sachin's questions a different way. Can you give us the year in which you think the Exelixis transaction will break even in terms of the balance of revenue and investment costs? Also, with respect to, I guess, taking the focus away for your other pipeline products, Somatuline. We previously had a discussion in the US where you highlighted you were doing very well with the launch, but the area you were struggling to break into was US large oncology centers because your competitor was using rebates for the higher dose to try and monopolize those hospitals. And I just wondered how you were progressing with changing that attitude amongst doctors. And also if you could tell us how progress is going with telotristat and regulators in Europe. And then finally, Mark, I guess a slightly difficult one. There's recently been some management change at Ipsen where it was cited that differences of strategic direction were important in that change. And I'd just love to understand whether Exelixis or the decision to use incremental cost savings in the base business to try and mitigate the investment cost impact were any of those strategic differences that were cited.
Okay, so let's take the first one in terms of the year where the transaction essentially would be.
I will just confirm that if the dilution will stop in 18, so it clearly will be break even by 18 in terms of revenue on cost.
So the second question was related to our progress in the 25 top oncology centers in the United States, whether we were progressing in terms of penetration. So Matthew, in that regard, we can say that actually geographically it's pretty interesting because on the West Coast and actually the South, Ipsen is doing extremely well in those big accounts. We have been a bit slower on the East Coast down to Florida, where there is a room for improvement. But we are definitely in good discussions with institutions to make sure that also Somatuline can be used as the competitor. In terms of the telotristat update, maybe Claude, you can give us a few thoughts on that.
Just that it's progressing really well. For the moment, the plan is still for Lexicon to submit their file to FDA towards the end of first quarter, and for us in Europe, we are planning everything to do that same submission with EMA on the second quarter. So no change to previous communication.
Okay. Then the last question, Matthew, related to our communication recently. You have to accept that in France, the way we operate with senior executives is that there are some rules to be followed, which is a code which is called AFEP-MEDEF. And when you join a company or when you leave a company, there are certain conditions that are being discussed and being used to do the separation. So what the subjects that you just discussed did not come into play in this decision. I think what's important for you to know is that the next CEO needs to be an international person, a person that has substantive experience in international, knows obviously very well the pharma/biotech business, has done a number of transactions in terms of business development, because this is one of the ways we will continue to grow. And then finally, has also a good understanding of science, since we are a science-based company, and we need obviously to keep that at the highest level if we want to be a leader in niche areas. Thank you very much. Next question.
Thank you very much. And your next question comes from the line of James Quigley. Please ask your question.
Hi, thank you for taking my questions. It's James Quigley from JP Morgan. Just a couple of quick ones. So on Somatuline, can you talk us through some of the dynamics of the new market share gains you're taking, and any competitive threats from Afinitor, and it's recently been approved. In China, in 2016 and 2017, could you talk us through your assumptions for growth, especially with Smecta and Decapeptyl, and how easy would the remaining OTC switch be, and how much incremental investment is required to fund that switch? And finally, more broadly in primary care, as the business has been deteriorating over the last couple of years, what are your key assumptions for growth, if different to the OTX? Thank you.
Okay, so the first question, so I'll take this one on somatulin, competition, in particular in the United States. So again, we have to differentiate the two markets, the NET and the acromegaly, which is a smaller part. So in NET, the real competition actually on somatulin per se has not changed, because somatulin, given its label, will be used as a first-line agent, for tumor control. I think one of the opportunity actually for somatulin to grow potentially is to expand the label for symptom control, which our competitor does have and we don't have. So that's one of the actions that we are currently undertaking, is to try to eventually get a label for this indication. Now, in the field of NET, there are obviously new competitions for patients who are advancing the disease, so after somatulin. And in particular, this is where Afinitor just got a label recently. We also expect approval of another compound called Lutathera, but these will compete not directly against somatulin. They will compete once patients progress on somatulin or on a competitive product, when they move to the next stage of the disease. We believe that the somatulin profile, good efficacy along strong safety, will be still sort of the standards for the year to come. Now, in the field of acromegaly, there is also a new competitor coming in, which will be launched in the course of 2016, which is an oral octreotide. This drug has shown in clinical trial a relative efficacy which is inferior to somatulin or sandostatin. So we think that the advantage of convenience will be offset by lower efficacy. There may be, in the short term, a bit of market share gain, but for the competitor. But we believe that in the long term, somatulin remains a very competitive profile for acromegaly. So all in all, we believe that we will continue to increase market share on somatulin around the world in 2016. Now, second question related to primary care investment, in particular on Smecta and China. Do you want to, for 16 and 17, do you want to?
Yeah, maybe we don't enter into some too much detail, but clearly, as you know, we are revisiting our strategy. We have been revisiting our strategy in China given the new environment. The two strategies are clearly different for Decapeptyl on one side and Smecta on the other side. We are basically specializing our sales organization for Decapeptyl, and we are moving to OTX model for Smecta in primary care. The total investment is not that huge. We are talking about 10 to 15 million that we are going to invest, which is mainly sales force and also some marketing support to make sure that we'll be successful, especially in the retail for primary care product.
Okay, thank you, Emeric. So next question. There is a question here in the room. Yes, please. If you can pass the microphone, Stéphane.
Thank you, Delphine Alouette, Société Générale. Some question, if I may. Regarding HCC indication, can we get a timelines and a news flow for the upcoming events in the short term? Secondly, back on Cabo, and considering the fact that you say you were break-even in 2018, I was just wondering, and want a confirmation here. So you're planning in a range of 300, 400 million sales as soon as 2018, which makes the break-even over there. Regarding the current R&D budget, can we get a breakdown of the current allocation between Dysport, somatulin, and possibly Cabo in the coming year? And looking at this slide, on slide 26 for the people on the webcast. Just wondering why, considering the fact you're going into M&A very actively, and Exelixis is showing about that, why you're keeping a group sales guidance? Thank you.
Okay, so on the HCC timeline, so maybe Claude, you want to comment on the study and the
yeah, I mean, so this is a phase 3 that have fully enrolled now for a couple of months, and they are planning to release information data on this large phase 3 over 700 patients towards the end of 2016.
Okay, so next question is for Aymeric about the Cabo investment and 2018 and the return.
Yes, I'm not sure to fully understand what the question. I can just confirm that yes, there will be investment for Cabo in 16, 17, and 18 that will clearly impact the profitability. We'll manage that in 17 and 18 to make sure that we recover some margin improvement to reach the 26%. Regarding the peak sales, I confirm that the peak sales of the product, given the ramp-up, will be beyond 2020, and that by 2020 there will be some contribution, but it's too early to commit to a level that are contributing to the new guidance that we are given to the market today. Maybe the question I will anticipate on the R&D, we are not communicating the breakdown of the product, but maybe a few words on Cabo. I don't know, maybe Claude, you want to comment on that? Specifically, most of the R&D is going to be found by Exelixis under the agreement. So there will be no R&D investment for the next few years from Cabo, as it will be fully funded by Exelixis under our agreement.
Okay, so next question. Operator, please.
Thank you very much. And your next question comes from the line of Olivia Capra from Barclays. Please ask your question. I think the fact that there's limited data showing Cabo post-IO treatment could be a problem. I mean, I know the subgroup analysis done in January said the benefit was independent of IO treatment, but given the timelines for these previous trials, I imagine there couldn't have been that many patients in the trial on previous IO treatment. The second is, do you see potential for a combination Somatuline plus Cabo in the NET market? And from a commercial point of view, how much of a European NET sales force expertise or infrastructure, if at all, do you plan on leveraging with this deal? And then just a third one, when you talk about project prioritization in the slides to minimize the impact of the 2016 to 18 investment, can you go into any details on that, please, so we can understand what the flex factors are in your cost base? Thank you.
All right, Olivia, so I'm not sure I picked up, I look at Claude on your first question about the limited data on subgroup analysis. That's what I understood.
I guess she's also mentioning the previous immunomodulator treatment prior to Cabo. So I don't think you made the assumption that we probably don't have many of those patients. I don't think we have any. But honestly, we don't have the full set of data yet. So that's number one. The other one was around.
The other one was a combination Somatuline slash Cabo in NET.
Right, and that's not been in discussion for the moment. Obviously, we'll have a joint development committee with Exelixis, and for the next couple of years, we'll look at other potential indication, and we have an opt-in in the contract with them, so we'll be looking at what are the other potential indication, but NET could be one.
Yeah, on the project prioritization, you may want to say a few things, Aymeric, and then I'll say also something else.
Yes, maybe just to make sure we have a good understanding of comment on how we cope with the dilution. Clearly, the level of investment that will be required on a full year basis in 17 and 18 will require some prioritization of existing projects and some cost savings at the company level to make sure that we keep the dynamic of the margin evolution as described previously. There is no, I won't detail the list of projects or the amount that we are talking about, but this is clearly the flexibility that we have to make the priority, to shift some of the project, and to make sure that we are in line with our margin enhancement program.
Yeah, so, and if I may, so you should really understand that, again, 2016 guidance is a bottom, profitability, that ongoing, our goal is obviously to improve it over time. That's number one. And two, we will continue our cost consciousnus. We are not going to stop what we have done. There is a deliberate intent from myself and the board to keep pressuring cost at Ipsen. Even though we've done, I think, a really good job under Christel's leadership, there is always more that can be done. So we are really deliberate on continuing our journey to try to be more efficient in the way we operate. Next question.
Thank you very much. And your next question.
Sorry, we lost you.
Your next question comes to the line of Eleanor Song from Goldman Sachs. Please ask your question.
Hi, thank you for taking my questions. 3 questions, please. Firstly, wondering if you could comment on your filing strategy for Cabo outside Europe in the territories that you have licenses for. Secondly, would appreciate any early commentary that you've had on the Dysport adult upper limb spasticity discussions you've been having with physicians and payers in the U.S. And finally, on Somatuline NET, just curious on where your share gains in the U.S. have been coming from. Here, I'd appreciate any commentary on the relative contribution from the watch and wait bolus versus newly diagnosis versus switchers. Thank you very much.
Okay, so filing strategy outside Europe. So Claude, you want to explain what we are trying to do? The priority is obviously Europe, but...
So the priority are right now Europe over the next, which will actually spray over probably 3 years at least, and Australia, and the rest of the territories is up to for discussion with Exelixis.
Yeah. So related to the Dysport AUL launch in terms of sort of opportunities and challenges, I think we are not getting any challenges from payers. I think the biggest challenge is again the fact that doctors have been used to Botox for many years. We have very good efficacy data with AUL with our new indication, but we must train the physicians and they must get used to the drug. So you have to be reminded that, for example, for the adult upper limb indication, there are 8 muscles that are affected. For each of the muscles, there are different dosage. So there is a substantial investment that Ipsen is making today to train new physicians, and physicians that have been used to Botox, to try to help them use Dysport, because we know that the drug works. Actually, there is some data. It's not comparative, but that shows that for patients, the onset of action is within a week, and also it lasts longer. So there is evidence that Dysport is a good value proposition for the institutions and for doctors, but we have to obviously let the doctors be confident about using the drug, and that will take time. It will be important actually to watch the penetration in big accounts. So far, we haven't been very successful, but there is some momentum possibly in that arena. So we will obviously report more after the 6 months results. Finally, on Somatuline, you asked about the question of where we are gaining a share. So essentially, we have for sure benefiting from some watch and wait patients. That's clear. We are also seeing, we are gaining, an increased share of the growth of the market, and the switch patients in some of the market research we have done is also starting to grow. There, we will need to wait, I think, until we see some institutions publish their own data later this year. Again, those are studies that some of the US cancer centers are doing. We don't know the result, but they may also give some indication as to whether this could pick up or not in the future. But I think overall, as you have seen, our market share growth is pretty impressive so far, and certainly Q4, when you compare to Q3, has been under acceleration. So we are certainly pleased with the momentum in the United States so far. So next question.
Thank you very much. And your next question comes from the line of Peter Tester. Please ask your question.
35% on new studies. You hinted a second ago you didn't expect R&D spending on Cabo to come in the next couple of years. Can you just put those two statements together, please, and just help us understand? Then on the guidance looking forward, you've obviously had a very good Q4. Earlier in the year, you had to deal with challenges in China and Dysports annualizing some of the effects of the launch. These seem to be relatively clear. We've talked about guiding, continued market share increase in some of the team. So I was wondering if you could just help us understand the guidance in context of Q4. And then lastly, if you could just, on the milestones, the 545 million of future milestones, to what extent, if any, do those relate to RCC? Thank you.
Okay, so I'm sorry, I did not fully grab your first question. Did you, Claude? On R&D, or
maybe you can repeat, because the line just started in the middle of your question.
The
so
line broke
if
up.
you can repeat the first question on Cabo.
Yeah, no problem. As part of your agreement with Exelis, you have an R&D share on future studies. You've suggested that R&D on Cabo would not be particularly significant in the next couple of years. I'm wondering how that R&D agreement phases in. At what point do you expect it to phase in?
Yes, just to confirm, the agreement with Exelis is that we are not going to fund any of the 2-day studies that are being done by Exelis. And then if there is any additional indication, any study where we want to elect or to opt, we have the ability to co-fund with Exelis those studies. We even the ability to make it if we are pleased with the indication at any stage of the development of these new studies.
Okay, and you don't expect any of that for the next couple of years?
No. Yeah, we don't know yet. Today, it's not backed in our business plan, but we are interested and we'll see how it's going to develop. But clearly, for the next 2 or 3 years, all R&D project will be funded by Exelis anyway.
Fine.
Thank you very much. And your next question comes from the line of Peter Welford. Please ask your question.
Sorry, we are just finishing the previous answer. So the second element of the question was related to Q4 and whether we could extrapolate, these great results, the 20% growth for 2016. So we gave you a guidance. So the guidance for specialty is, greater than 10%. So we cannot fully extrapolate what we did in Q4. However, we are determined to keep increasing market share on Somatuline and on Dysport in 2016. And then the last question was related to future milestone in RCC. So maybe you want to characterize them a bit more?
Yes, maybe just to be clear. Clearly, out of the next milestone, the $60 million milestone to be paid to the EMA approval for RCC is fully linked to RCC. The next filing milestone, which is linked to HCC, so has nothing to do with RCC. And regarding the commercial milestone, as you may imagine, some of them, very limited, are related to RCC, probably in 17 at time of launch. And most of them will be paid beyond 2018 or 2020 on our, based on Swissol, that will both encompass the sales that will be done for RCC and for HCC or other indication going forward.
So next question, please.
This question comes from Peter Welsford from Jefferies. Please ask your question.
Hi, yes, thank you for taking my questions. I've got a few left. Firstly, just with Dysport, you mentioned that the PLL indication has been filed in the US during the fourth quarter. I wonder if you could please provide us an update on the ALL indication, adult lower limb, and how discussions there are going with the FDA. Secondly, coming back to cabozantinib, I'm wondering whether or not we should take the capsules price in the MTC indication as a good estimate for the future of the drug, or whether or not the plan, when the tablets are approved, is to reprice and brand the drug, and it should be considered a relaunch, and we should not be using the existing formulation as any sort of guide. And then thirdly, big picture, does the Exelixis cabozantinib deal now see an end for Ipsen's sort of extensive later stage business development plans for a while, or is management still hungry to do future deals of this sort to further boost the late stage and commercial pipeline? And I guess following on from that, does the current change in the management in any way impede the ability of the company to do transactions at this time, or have you still got the full authority and backing of the board to proceed with any such transactions that may present themselves? Thank you.
Okay, good. So Dysport ALL, Claude, you want to?
Yeah. So no, we are on track. Actually, we are, as you described, in fairly heavy discussion with the FDA as we speak, and the plan is still to submit the AL file in the US second quarter of 2016.
Okay, so the second question was related to pricing. Again, we are not going obviously to give our pricing strategy to our competitor, but I think what you need to bear in mind is the cabo usage in thyroid cancer is at a very different dosage than the one that is in renal cancer. And again, the composition of the product is different in the sense that one is a tablet, the other one is a capsule. So I think from that you can imagine probably the answer. So the third question, business development deal. So again, last night we got the approval for the cabo deal, and I get full backing of the board to continue to actually accelerate the growth of the strategy. And probably, as you noted, currently I'm the CEO, at least for a while, and I will be, the chairman, in a few months. So if I am the chairman of the board, it is, I believe, because I can continue to do what we have done in the past. Otherwise, I wouldn't be here. All right. Thank you very much. Next question. Okay. So no more questions. So we really appreciate your interest in Ipsen. So we are looking forward to report our media results in 6 months. Thank you. Take care.
Early on in life, everything is simple and clear, like the beating of one's heart. And when we're in good health, we sometimes forget how precious that is. And that our body is fragile and complex. So when we become ill, and it becomes serious, our world is turned upside down. At times like these, we must first rely on ourselves, on our courage and determination, and then on people close to us to surround and care for us. At times like these, we also want to be able to count on our doctor and on the expertise of those who can help understand. Fight and treat these illnesses. In the fight against debilitating diseases, we need innovative, targeted, and effective treatments. So there are teams who research and develop new treatments so that life remains simple, like the beating of one's heart.